Hey everyone, welcome to another video by Stocktrades. My name is Matt and today we are going to be looking at a couple of hydrogen stocks that may be of interest to investors. Just as a reminder, this is our first video in a couple of weeks. We're likely going to spread out the videos a little bit more throughout the rest of the summer. Myself and Dan are taking some time enjoying the holidays. We hope you are as well. And we are going to ramp up videos this coming fall. So with that in mind, we're going to get to the top hydrogen stocks right after this. Renewable energy is the future. That much is a certainty. We know that the shift is currently happening. What's much less certain is the pace at which this shift will happen and what companies are going to emerge as the leading renewable energy companies on the TSX or worldwide, if you will. So investors are trying to figure out how to invest in emerging technologies, especially with relation to renewable energy. It's tricky. And investors are going to have to be mindful of this, that they are going to experience considerable volatility in these industries. A good example of this is that renewable energy companies were catching quite a significant bid between November and early 2021. That has all but evaporated as renewable energy companies have cratered ever since. Now they're starting to find a bottom and it might be time for investors to look at these companies once again. So our focus today is going to be on hydrogen stocks, those that are involved in the hydrogen industry. And it's important to note that hydrogen is probably the riskiest area at this point in time in terms of renewable energy. We are still probably decades away from hydrogen having a major impact on renewable energy. That being said, technology has evolved to a point where governments worldwide are now taking it very seriously. In fact, hydrogen has been all over the news. Governments around the world are establishing lofty hydrogen strategies, viewing hydrogen as a key resource to play a big part in combating climate change. Even Canada has launched its own hydrogen strategy in December of this past year. As part of the strategy, Canada believes that hydrogen can account for 30% of domestic end-of-use energy by 2050. So, as mentioned, decades away. Others have announced hydrogen strategies that include Japan, South Korea, Australia, New Zealand, Germany, France, Portugal, and the Netherlands. And there are many more, but those are some of the big countries that have all announced hydrogen strategies. But the reality is that hydrogen is far from becoming a viable commercial alternative to fossil fuels. From distribution and storage to transportation and consumption, the technology to adopt hydrogen is still very much in its early stages. So, in other words, we are still many years away from having a true end-to-end hydrogen supply chain. That's the bad news. The good news is that investments in the technology is ramping up in a pretty significant way. As mentioned, governments have made it publicly known that they intend to invest in the hydrogen industry. In Canada, the industry is estimated to create upwards of $50 billion in revenue per year and create 350,000 jobs by 2050. Internationally, demand is expected to reach $2.5 trillion by 2050. So there's no question that there is mass potential for the industry. It certainly exists. Which brings me to how can investors benefit? How can they take advantage and leverage some investment opportunities? Today we're going to take a look at two stocks that are involved in the storage, if you will, of hydrogen, so the battery component of hydrogen. And the first one up on our list is Ballard Power. In order for hydrogen to be fully adopted, fuel cell technology is going to have to advance and is going to have to make meaningful progress. In Canada, there are two leaders in this area that are currently publicly listed. There are others in other parts of the country, but on the TSX index, there are only two. And the first and most well-known is Ballard Power. The company is one of the leading hydrogen fuel cell companies in the world. It has shipped over 850 megawatts of PEM fuel cell products and counts many of the major auto manufacturers as strategic partners. It's important to note that Ballard has a commercially viable product. That's what separates it apart from many of its other peers. However, as with any new technology, the adoption has been slow as the company is focused in areas where fuel cell technology has a clear advantage. Today, that's in the heavy commercial space. Thus far, it has powered about 1,000 transit buses, 2,200 trucks, and has 4 trains and 5 ship projects in development. Ballard is largely considered one of the world's best fuel cell companies with leading technology and proven use cases. Unfortunately, the stock has been anything but a leader. In the early 2000s, the company's share price soared before crashing down to earth and effectively did nothing for about a decade. The interest in the hydrogen industry actually reached a fever pitch this past year, hitting multi-year highs in 2021. Once again, however, the bottom completely fell out and its share price dropped by approximately 60% in the first half of 2021. If you look at its chart, it's not a pretty one. That being said, the loss in value, it's not all that surprising. Ballard was trading at extreme valuations and was benefiting from market euphoria. Ballard was benefiting from fear of missing out, so FOMO investing. We actually advise many times at Stocktrades Premium that members should be cautious with Ballard. Despite the fact that the underlying technology was sound, we felt that the stock price got way ahead of itself. Even at today's prices, investors should exercise some caution. We are still very much in the early days of the industry, and at 50 times sales, Ballard isn't exactly cheap. The company is also not expected to become profitable for some time, and analysts are expecting revenue growth in about the 50% range through 2023. While this is a healthy growth rate, Ballard has a pretty mixed history of meeting estimates. So all this being said, Ballard is a leader. It's a technology leader. But as an investment, it has been very much hit and miss. And it'll all be dependent on when you got in to Ballard as to whether you deem it a success or an utter failure. We think, however, that moving forward, Ballard will continue to be a leader. The question is, can it meet lofty expectations? We have no problems investing in the industry in companies like Ballard, but do so with money you're prepared to lose. Do so with the expectation that you are going to experience significant volatility. Speaking of volatility, there's actually a new player listed on the TSX index, and that's LPEN, Loop Energy. Loop Energy only went public in February of 2021, and much like Ballard, focuses on the design of PEM fuel cell products for the electrification of vehicles. The demand for its IPO was actually pretty strong, and it priced at the top end of expectations at $16 per share. When it first listed, it actually touched a high of $17.44 on its first day of trading. Not too bad. Fortunately for management, the IPO was at peak investor demand for hydrogen stocks. Bad news for investors, those who bought in at the early stages of its listing are now likely sitting on big losses. Since its IPO, Loop Energy stock price has cratered and has lost about 60% of its value. While the downtrend is unnerving, it's a result of negative industry sentiment. This has nothing to do with the company's performance or its products. In fact, we quite liked the company when it launched its IPO, as it was much more attractively valued than the competition. Myself, I actually decided to take a position in the company as well in those early days. As mentioned, however, the market soured on the industry and valuations cratered across the board. Much like Ballard, it is focused first and foremost on commercial applications including light commercial vehicles, transit buses, medium and heavy duty trucks, marine and train, mining trucks, material handling vehicles, and stationary power. So really it's heavy industrial. Unlike Ballard, however, Loop Energy is a pre-revenue stage company, so this makes it difficult to value. It has only begun marketing its products and expects to exit 2022 with approximately $13.9 million in sales, up from only $353,000 in 2020. It believes it can achieve long-term compound annual growth rate of approximately 40% through 2030. So that's quite an impressive growth trajectory. We're talking about 40% compound annual growth rate over the next 10 years. Whether it can manage this level of growth remains to be seen. It's a newly listed company, so management has not yet demonstrated its ability to execute. The good news is that the company is successfully growing its backlog. In 2020, Loop exited the year with a $3.2 million backlog. When it went public, that backlog increased to $16.4 million, and as of the last update, which came in April of 2021, the backlog stood at $37.6 million. It has effectively more than doubled every single time it has made a new announcement. It's important to note that the company's backlog refers to projected sales over the next 24 months. So these are 2 years worth of sales. Analysts seem to be on board and they are calling for actually 200% annual revenue growth through 2023. Assuming the company hits revenue estimates, Loop is only trading at approximately 4 times fiscal 2022 sales. In comparison, Ballard is trading at 37 times fiscal 2022 sales. So much like it was at its IPO, Loop Energy is cheap by comparison. What makes Loop particularly attractive is that it's backed by Cummins, a $34 billion global industrial giant. So this strategic partnership will enable Loop easier entry into a multitude of markets. While the potential looks attractive, Loop Energy is likely to be even more volatile than Ballard. Remember, this is a newly listed company, and as such, it's going to be under greater scrutiny than its more established competitor. So the bottom line with Loop is this. If it executes well, Loop looks very cheap by comparison. If it starts to miss and it doesn't execute well, then we are potentially looking at further downside or at least flat trading until the company can start establishing itself. That's the risk with this. Ballard has had a very mixed history of meeting analyst estimates and even its own guidance. It's been up and down. Loop has no history of execution. So if it can establish itself and if it can execute against its own guidance and analyst estimates, then the company is positioned to do quite well moving forward. We like it here. I own it. I haven't sold a share. I'm actually looking at averaging down here. I'm quite liking the prices where it's trading at. As mentioned, 4 times fiscal 2022 sales. That's pretty cheap, all things considered. So these are the two main companies that are involved in fuel cell technology for hydrogen-powered vehicles, Ballard and Loop Energy. They're both listed on the TSX, and we think that they're both worthy of investors' attention. Not saying that you have to run out and go invest in these companies right now, but if you're looking for exposure to the hydrogen industry, this is one area where you can get it. Over the short term, their performance is going to be driven by market and industry sentiment. Over the long term, it's really going to be on their ability to execute and whether or not hydrogen as a viable renewable energy source takes off. The jury is still out here. Only time will tell. However, we're pretty confident, given the level of investment that the governments are making towards hydrogen, that it will find a place as part of a broader renewable energy strategy. So we're confident in the sector, but remember, please don't invest with money that you can't stand to lose. This is going to be a very volatile industry, and companies like Ballard and Loop Energy are going to be volatile. You're going to see big ups and big downs. So you need to be able to please invest within your own risk tolerance, and only you will know what that is. If you can't handle the ups and downs, it's likely that these investments are not within your risk tolerance. So be mindful of that. Hope you liked the video. So please comment below. Let us know what you think about these two highly volatile companies. Are you invested in either of them? As mentioned, I own Loop and will continue to hold it for years to come. It's actually just put away. I'm not even going to look at it. And we'll see how the industry progresses. But would be interested in hearing your thoughts. And as always, please hit that like button and subscribe to our channel for more great Canadian content. Until next time.